The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to a beautiful and extremely windy day at the headquarters of Technical Trading, TFNN, in Clearwater, Florida. I am your squeezable and lovable host. And today you would have noticed if I had a toupee, because it's blowing about, about 50 mile an hour out across the causeway. Nice white caps. Looks stormy out there. Kind of strange on such a beautiful blue sky day, but pretty neat. We're all waiting for one thing, and that is the squeezably soft Ben Bernanke to come out. Ben Bernanke, Sharman Bernanke. That's why I always like that. Old Sharman, squeezably soft, because he loves the squeezably soft dollar. Anyway, we're waiting for him to come out and prognosticate about all things large and small. So we'll be waiting for that to come through and watching what's going on in the market. Today we celebrate, the 30th year after Lotus 123 shipped. It was the first really Office suite to ship usable word processor, spreadsheet, and presentation software. And graphics software, let me put it that way a little bit better. So you can make charts and that kind of stuff. Graphics have finally kind of moved directly into Excel for Microsoft. So there's not a big fight out there anymore for who actually has a decent spreadsheet. But that's kind of all wrapped in. Anyway, 30 years ago, they ran their Super Bowl ad, and it was shipped, I guess, today. And the first computer program to be advertised on national TV. Probably a good indication of when the computer revolution really started, when people could start affording to advertise something on TV. Pretty goofy ad. It's out there on YouTube. And who'd ever think that YouTube would end up being a great facility for history? So you could see things like that. Pretty goofy ad about switching disks. Oh, what a day. How barbaric, putting different 5 1/4 inch discs in and out of a PC. Oh, the humanity. Anyway, pretty goofy ad, because they all end up singing and dancing at the end. It would be kind of a 1980s version of Glee at the end. But what can you say? The first spreadsheet, if the guy that invented the spreadsheet, I'm trying to remember his name, was VisiCalc, 1977 or 1978. It had just the wisdom to have patented it. My word, how rich that guy would have been. He let it go. He made millions. Thought that in 1978 you make $5 million with VisiCalc. You think you're on the top of the world. Of course, there was probably another billion or two to be made on that he didn't make because of filing patents. VisiCalc became some of the other spreadsheets, eventually Lotus 123, to be blown out later by the Windows Office suite, which Office 13, I think it is, actually started shipping either yesterday or the day before. And that's the version to go along with Windows 8. Kind of 30-year cycle of everything out there. Yeah, Excel. I thought I said Excel. So anyway, it is what it is. Everybody probably in the den, all waiting with bated breath. That means putting a little worm on your tongue, I suspect. But anyway, we'll be watching here. Hopefully somebody in the den will post the announcement as soon as it comes out so I can read it. I'll probably get it on my news feed. But a lot of times it gets rather busy, so probably have to read it during the first break. And we'll talk about what's going on. Earnings, of course, Arkansas Best today, AVB. Boeing's already out, doing a little better. CTX, COP. After the bell is Electronic Arts, FIO, Level 3, Qualcomm, and Starworks Solutions. So what we have today is probably a pretty big day. Qualcomm and SWKS seems to be a favorite around traders, or had been around traders for a while. So we'll have to see how those come out tonight. Of course, probably not anything to do as close to what we're going to have out of Bernanke today. But tomorrow we CPT, CRR, which is what the fracking company that makes the gunk to shove down the hole to frack, CTRP, Dow, Energizer Holdings, HGG, which is kind of like Best Buy, PHM, SPF, T-Lab, and Under Armour tomorrow. So a lot of earnings still coming out. It'll be kind of interesting, but I don't think near as interesting as what we have coming out here in just, 3 minutes supposedly? Anyway, news came out this morning on the GDP, and surprise, surprise, the government shoved every bit of spending that they could into last fall before the election, and now it's all out. The U.S. economy shrank for the first time, and basically they were looking for, 2.5%, ended up with zero growth. And why was that? That's because all the military spending cuts and basically everything else that they could throw at the government to spend going into the election was spent. We're back to exactly what we have now, looking a little bit more like Japan. 10 years of, 10, 12 years of walking in the wilderness, almost like a Moses story out there, actually getting and seeing the kind of just lost in the wilderness of zero growth, and finally coming through. But the question is, why are they coming through now? Is it basically a currency war that Japan is moving? And for most people, I think they are saying that it's Japan and their currency war. As we look at the rest of the market, not a big move out here. Of course, waiting. We're off about a point on the S&P cash, 2.4 billion shares on the consolidated tape, so we'll have to continue to see what's going on. Apple did last night get probably a negative issue for their Samsung lawsuit. Basically, the judge finally said that that Samsung did not willingly infringe. I talked about this when it actually was decided, and everybody thought that Samsung was dead. Apple, there was no way that they could lose. I said eventually this would all get washed out. The question is, will a appellate court, now that the judge has basically found out that there was no willful infringe, still put $1 billion fine on Samsung? And 99.9% of these are going to get thrown out. They didn't willingly infringe, and a lot of these, the basic, what they called the jobs patents, were all thrown out for the a lot of the touch and feel of the NUI interface. So not a big deal, and it's slowly getting unwound. Eventually, everybody gets all these things correct, but we'll have to see. She said the trial was fair, which I think she's going to lose on appeal. But a lot of times judges, if there's probably a better way to go, she's probably hoping that it just all gets thrown out, not on the basis that she had a juror that was the jury foreman that was obviously doing a lot of shifty stuff. Let me put it that way. Anyway, that's pretty much what we have at the moment. We're going to start looking at some stocks out here fairly early today because, of course, we are looking at seeing what's going on in this marketplace. Thought we'd start on some Gartley patterns today. The one that interested me probably the most is XOP, which is the oil and gas ETF. And let's see what we have here. Maybe it's on a 1 year. Here, there we go. XOP kind of looks like maybe it's finally topped up. It could get just a little higher, but very close. If you're looking at Gartley patterns, basically it is an ABC kind of pattern on the way up. Started off with a basically big decline. at least in this bearish butterfly. At the very end of it, of course, you get a big move that equals basically 125% of the move down. If you're not familiar with Gartley patterns, Tom's book, The Art of Timing the Trade, is available, and whatever it is, it's probably cheap at 4 times the price, $20-25 or whatever. But if you really want to understand Gartley's, probably the best treatment of Gartley's in a book out there. But basically, you've got a pattern. It is Fibonacci retracements. Eventually, in the butterfly pattern, you go to basically 128% of the original down leg. You want to see the A to B pattern retraced about 618%. This one almost perfect. You want to see the energy really start to, if you're thinking of going short, you'd like to really see the energy coming out of this leg up, and it truly is. You've got basically a 2/3 of the energy on this last leg up as you had in the leg down from the X point, which is October 17th, to the A point on November 16th. See if we've got some news out here. No one's posted anything in the den yet. Let's see if I've got a decent movement in the S&P. Nothing so far. So we'll have to see. Maybe it's still delayed. Anyway, that is one of the ones that has me probably the most interested. Do you have a little bit of upside risk here? The target is 59.49. We got within about 20 cents of that, but the energy is very light. You could go short. You pretty much know that you don't want a significant close over 59.49 on the XOP. Other things we're looking at out here, UNH, which is United Healthcare. Another one of these stocks. This isn't a Gartley butterfly, but just a standard, what they call the Gartley 222, because it happened on page 222 of his book. This one is didn't quite come down and test the C point, so normally not one of the better looking Gartley patterns out here. You'd like to see it, probably the A to B leg come up just a little less. But Gartley aficionados still call this a Gartley, and this is exactly where you expect to start running in to resistance. Volume, not all that bad in here, so probably not as big a deal. TJ Maxx is one that I think is starting of a bigger deal, and we'll continue looking at that as I continue trying to see if we get any kind of movement out of the off a point here so far. I don't know if it's out. I don't see it on the news list just yet. Anyway, we've got TXJ, which is the TJ Maxx company. This is one where we've seen decent retracement. Basically, you had the A to B portion retraced about 80%. Again, the ideal is somewhere around 60%. We go back up and start finding resistance at 45.26 as the projection on this one. But hopefully you're watching on Tiger TV. If not, you can always go to channel 14 and check me out there and look at these patterns on Tiger TV. Get a kind of a better idea if you're new to Gartley patterns. This is the standard 222 pattern. Give me a call, 877-927-6648. 877-927-6648. Give me a ring.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Well, the Fed is citing a pause in growth, but it stands by its desire to stimulate everybody. Stimulate. Can't find by keeping borrowing cheap for the foreseeable future. Guess that means that whatever he has done has not worked, which is not a big surprise. On the line, we have Joseph from Amherst, New Hampshire on the line. How are you doing today, Joseph?
I'm doing great.
Well, you're going to do a little bit better with a half-ounce silver bar from Great Panther. You are our winner of the hour.
Thank you very much.
Every hour this week, we will be giving away a half ounce of silver, except on Friday, when you're going to be an extra special winner with a full ounce. Anyway, we'll get that on the way to you. What's the weather like up there today?
50 degrees after ice this morning because of the quick drop in drizzle with the sub-freezing temperatures at night.
Well, God love you living up north.
Yeah. One of the
I've got to turn the air conditioning back on in here as soon as the brake turns on. Anyway, are you playing any of the silver stocks?
Yeah, I was looking at the AGQ. Or is it AGQ? Yes.
Yeah.
Pretty much looking, and I guess with the Fed continuing to do what they're doing, if like you said, which doesn't work, but it's making everything else work well as far as the hard commodities. So
yep. So a nice bounce in gold and silver today. So I want to thank you, and you have a great day, Joseph.
Thank you very much. Thank you all at TFNN.
We'll get this on the way for you.
Thanks.
And you can be a winner. You just had to sign up. Do you have to? Can you still sign up? I think you can still sign up on the front page of TFNN, and maybe we'll get lucky and get that Friday full ounce of silver. So I'm sitting here watching and kind of tap dancing as we go through and watching the response to this. We're off a little bit, about 3 points on the S&P. Pretty muted response out here. So maybe it doesn't matter whether we're growing or not, or whether or not the Fed's going to throw another $1 trillion at us. Maybe we just tread water here for a while. Wanted to go through some of these other charts, which we're going to get to. TWD, which is Tidewater. Seeing a lot of these energy stocks set up kind of a nice little Gartley pattern. They're right up against where they shouldn't go any higher if this Gartley pattern is going to work out. The energy off this leg, fairly good. TDW, is the symbol for Tidewater. But this is kind of the traditional Gartley pattern. You might like to see the X to A leg a little shorter. This one's fairly long. You try to see some kind of symmetry in some of these, and of course you try to see these things come back about a 618. If you're looking at my charts up here, you'll see that it has an AB to CD ratio. Ideally, you would like to see a 1. That would be kind of a perfect lightning bolt back off the bottom and pretty much a decent retracement off the top. And at that point, maybe you'd look at shorting this. You want to see lighter volume. You actually had a little better volume off the high out here in Tidewater. So probably not the best Gartley pattern out there. Now, here's the one that really has me going these days, and that is the S&P Bull 3X shares, the SPXL. This is exactly what you're looking at, and a huge difference in the energy between the X to A and the C to D leg. This also had basically your 50% retrace, which is awful good. This gives you the kind of blow-off top that a lot of times you're looking for. Ideally, this would come back probably in that 90, what is that? That's a gap from about 87 to 92, 93, something like that. It's actually a double gap out there, but on fairly strong volume. But that's probably where you're looking at a retracement, and there it would tell you whether you wanted to buy this market for the next leg up. But I think we're kind of getting awful winded out here in a lot of these stocks. But when the energy's off in the broad markets, as it is on this last leg up by about 25%, it makes it pretty easy to see with my Power Law Vector indicator, which puts together both price, volume, and time to let us know just how much energy was expelled to actually get moving. And pretty good indication, just a little over its target of 102.50, got to 103.93 on January 30th. Well, I guess that's today. And it's kind of closing back in there. So not a bad looking little chart out here. This is giving kind of the idea that we've gotten up here with fairly light volume, at least over the last 7 trading days. Almost all the energy came at once right after the first of the year. We'll be back in a minute. We'll be looking at some more charts. You can give me a call at 877-927-6648. That's 877-927-6648.
Just recently, on December 28th, Market Insight subscribers were advised to go along the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, wanted to look at the ProShares Ultra Dow 30 DDM, which is the symbol for that. Again, you can give me a call at 877-927-6648 as we're waiting for the markets to digest what we have out here. Not much movement so far. Certainly no volume to really speak of. So very tough to see how this is going right now. But market that could care less about how bad the economy goes makes me think of an old joke. And after we get done with DDM here, I'm going to bring it back up again. But go back here. What we do see is another Gartley pattern out here, and fairly good. This one is a bearish butterfly, which means basically you have kind of a move out here that fairly large, and probably a good chance this thing's going to at least have some pullback, at least to the X point where this whole thing started, which is $76.30 from the October 5th high. But we had a nice move down with fairly strong energy. If you can't see that number on Tiger TV, it's a 1.4 down on my power law vector indicator. On the way up, you basically have 1.1s with a decent retracement of about 54%. This has pretty much come up. The target was $79.71. You got to $80.23. Look to see how we finish up the end of the day out here. But so far, I wanted to check the volumes real quick. 2.5 certainly it's never a good thing to see challenging the highs with a lighter volume, but certainly the last couple of days it looks like this market is gasping for breath at these high levels, and probably need it. If you're a bear, good time to short. Even if you're a bull, maybe a good time to take some money off the table or buy some puts. Since the VIX is at ridiculously low levels, let me get my VIX, and it's 1386. When you see a VIX, basically under 15, and you can get implied volatility on the underlying stock, even if you really want to be long, it's time to probably buy some downside protection in these stocks. And you can always get out of it if the market starts to turn against you. Sell the equity and sell the underlying or the puts to the underlying equity. But to me, just looks like we've got a decent pullback coming, and we'll take a look at it. I wanted to get into a single stock since we hadn't. It was one we had in the newsletter that we talked about, and that was 3D Systems. We covered that at the open, or before the open yesterday, actually. I think I tweeted out that I was covering it about 8:30 or 8:45 or something like that. Newsletter came out about 9:05 Eastern time, but we went ahead and covered at about $58. It got down to 56.16 for a blink of an eye. But it got out of there about 58. We were short just around $70 or just under, and I had a nice move in this. There are a lot of these stocks that are coming down with monstrous volume. The last move up on these is been rather tough. I suspect that we're probably going to get these dead cat bounces off these huge moves down, and ideally, we're looking for probably double repos on most of these stocks before we reshort again. Eventually, this thing is probably coming down to that $49 level, and maybe even lower after that. I was a big fan of this early on, and it ran a lot farther than I thought it would. But it's probably been rather lofty, like many of these stocks out here. One of the other ones I wanted to talk about today was soda. When I found out that the short interest in SodaStream International, the symbol is SODA, is now over 50%, wanted everybody to take a good look at it. Either somebody really knows something well or not. I wasn't going to short this again, and at 50%, now it's probably off my radar for a while. They are going to have a big ad in the Super Bowl. But my guess is that people were going to buy this thing pretty much have bought it. I think that they're pretty close to market saturation. I never go wrong based on the laziness of consumers out there, that they're going to continue to go up and pick up all these specialty items for their SodaStream. I know a lot of people like them, but it just has the air of fad to me on this. Of course, this is one of the ones you want to watch if anything starts blowing up in the Middle East, because it is an Israeli company. And they always have that overhead in everything they do, since I think the products are actually manufactured there. But just remember, this thing's got a 50% short interest. If you see this thing starting to move, maybe one of the best intraday day trades that you will have if you can get in on the short squeeze side of this. But I would not be holding this thing overnight. There is a reason why they are short 50% on it. We're going to look at some other stocks out here. Let me clean this up a little bit. VeriSign, another one of these stocks that has blown out, and it's come back to its gap area. The one thing that I really think that makes this probably one of the better shorts out here, VRSN is the symbol on it, is a super high volume low that blew out down to about $33. Pretty good indication that it's going to get back to that low, and that low was on November 30th with 45 million shares. Just probably 85–90% chance this thing gets back there. It's actually going and bounced off some very long-term gaps that happened when this thing really started to take off back in December of 2011. It started off, this thing went to a high, never retested that high, but certainly when it did blow apart over the, when was that date out here? Blew apart on November 26th last fall. This thing, 23, 24 million shares, and you come back into it with the first time of 16 million shares. You get back into it today with 9 million shares. Just not enough to really make me think this thing's going on. In fact, the volume's been last couple days, and a couple of dojis out here. Could this thing go one tick higher out here on a market movement? But certainly, if you are long this thing, I would be out of it, and would consider one of the good patterns for shorting out here. We'll continue to see these highs being tested on lighter volume, especially in the REITs and ETFs. We've had one that's starting to make a good symbol out here, or good signal on the Vanguard REIT ETF. And that is a high out here tested on a significantly lighter volume. It did pierce and prove the point, as it's called. Went to a higher high, lighter volume. In this case, it was challenging the September 14th high at $69.20 with 4.8 million shares. When you got into it with 3.3 million shares on the 29th, it has closed back below that. So if you were long, a sell signal is been in there. I don't am not real big on the energy up. Was actually not too bad. This thing could probably easily come back to that $66 level if you are really still positive on housing and homes. Probably a good level to be watching to buy that when it comes back. Textron, another one of these companies banging against highs on lighter volume. This one had a nice little doji out here today, but it went above the April 3rd high, which was $29.18, 5.3 million shares. We're going to have very light volume today, but this is the third attempt, and the second test of that April 3rd high out here. Textron, TXT is the symbol on that one. Another one that, go on somewhere else out here. See what else. Lowe's is kind of interesting. Lowe's had a huge gap down, and it's just now coming back and filling that gap. That gap actually happened, let me see back here, happened on the, May 2nd of 2011. It came down with 2 million shares. We are now coming back into that gap. Tried to come into it on October 18th with 930,000 shares. Pretty much a little less volume once again out here. And, some of these are actually filling all the gaps already. But there's some nice downside gaps also to be hit. In this case, on Lowe's, symbol is L, back to 41 bucks. I'm seeing a lot of these housing-related and building-related stocks kind of looking like they're pretty toppy out here. Kimberly-Clark, which is another one of these stocks, looks if we got maybe into some downside, maybe people would go to Kimberly-Clark as a safe haven. A lot of these consumer companies become safe havens as soon as the market starts heading lower. And this one certainly coming in with a lighter volume so far today. The August 3rd high of 2012, $88.25, 4.7 million shares. Really just fell out of that bed there. It's been coming back and trying to fill this and get back up to that, but we needed probably another good million and a half shares before the end of the day. Look at KMB, Kimberly-Clark. We were talking about real estate. I'm really looking at the U.S. Real Estate Index Fund, IYR. This thing's starting to confirm. Volume was just about 10% off, so not the best signal of the bunch out here in real estate. But again, nice gap ups from that January 2nd, 3rd as we came back, and just shy just a little bit of the volume and the energy out here. But we'll continue to look at this one, but looked like it went above the high. It's closed below it, and did it on 10% lighter volume, so a valid sell signal in it. Again, you can give me a call, 877-927-6648. That's 877-927-6648. We'd gladly take your call. Harley-Davidson, another one up here at a major milestone. This thing looks like it's also gone above its high yesterday. It's now pulled back into the trading range on lighter volume. We're looking at the May 1st, 2012 high at 5.7 million shares. Got into it yesterday with 3.5 million shares. It did go above it and close below it. That's what we call proving the point. Actually pierced it, tried to go higher. Volume didn't come in. We now see the pullback into that same trading range today. Close below that 54.32 is a valid sell signal if you were long. Energy, again, not all that bad on the way up. Probably better shorts out there. Direction Energy, the bull shares, another one up against very strong resistance levels. And as we do that, let me check just very quickly out here. We got enough stuff going on out here. Just trying to see if there's anything going on real quick. And, we're off 3 points on the S&P cash. Could we get a gap down off this thing? Yeah, I think a lot of people still believe this market can't go down as long as Bernanke's there. And I think maybe they're wrong. I think there's a good chance that we're going to get at least a decent pullback. Anyway, the ARX, which is the Energy Bull 3EX shares, coming up against one of the gaps. There's kind of been resistance for a while. Last time it was into this range was February 24th with 1.2 million shares. What did we have yesterday? 1.1 million shares. So not a lot of energy as we go and go after some of these higher moves out here in the marketplace. Let's see what else we had. EMC. We'll go through both Seagate and Western Digital in a minute from earnings yesterday, but EMC is another one of these companies. It's kind of bounced. It came down a very heavy volume yesterday, along with Western Digital and Seagate, which we'll get into, and that's going to be one that has to be tested. We may be getting a bounce out of this EMC, but be very wary. This thing came down and had monstrous volume back into what should be the support level for EMC. And in fact, we got a minute here. STX is Seagate, we've been talking about for this one for a while. Their margins, they finally admitted, are starting to go down the other side. There was floods in Malaysia that we talked about on this show, probably 4 weeks before the disk drive move really started, and the margins started to go up with the shortage of disk drives. We've seen this thing try to bounce through that 32.55 level from May 1st of 2012. Tried to do it on August 2nd, 17th of this year, but volume was just about half. We've gone above the same level. You had a high of about 15 million shares, and of course it closed back into that trading range. So where are you going from now? I suspect that with margins continuing to fall, you're probably going to see this thing over time come back into these gaps right around $30, at least on Seagate. WDC is the opposite one of this, which is Western Digital. Chart almost looks the same, and probably the only difference is this one had a huge volume move just a few days ago, and a significant volume day down yesterday to negate it. So probably the same thing, almost a blow-off top. And that you have a nice gap out here at about $43. My guess is over time, Western Digital is probably going to get back to that $35 level, which is probably around what they can continue to earn. Give me a call, 877-927-6648, 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
And as we get back to it, we've got a few earnings after the bell. One I'm going to be watching out here is Fusion.io, especially after the decimation of Western Digital and Seagate. Symbol is IFO. Recent IPO out here in the SSD marketplace. But pretty close to lows. My guess is if they don't come out with stunning earnings, they're probably headed back down to this June 11th low at $17.45. So not a huge move out of this thing. Percentage-wise, probably fairly decent. They've been doing a little better out here, but I have a feeling that if Seagate and Western Digital are not really moving a lot of units, that it's going to be tough on Fusion.io. Also, one of the other things that's kind of interesting in Seagate and Western Digital is they are shipping these new drives that are helium filled. Let me put it that way, helium filled. They can put in more platters and run extremely cool because of the lighter gas than air in there. Surprisingly, enough of a difference, and especially where heat is an issue and also power draw is an issue in these server farms in the cloud that everybody's using. A lot of people are deciding to go ahead and opt up for these drives from Seagate and Western Digital. A little higher margin on these things, and Seagate and Western Digital still aren't making it. Fusion IO probably still having the same kind of issue. So watch for that one after the bell if you're looking for a little action. Today, what I was looking at is the stocks that are moving, and of course, RIM is one of those. I did look at the reports of the new RIM product out today. The market's giving a collective raspberry down on monstrous volume, 180 million shares. This is one of these stocks that's just going to take forever to go down because of huge short positions in RIM. The new product is fairly good, but probably too little too late. They have a couple of new features. I expect Apple and Android to grab those features fairly quickly. But nothing that you can really scream about. They actually are claiming 70,000 apps at launch time. Most of these are converted Android apps, so not written natively for RIM, but gives them a good talking point out there. I know a few people that still use RIM. Probably the biggest reason to have RIM is in the third world where you need secure communications. RIM does offer, through its networks, some of the most secure communications, and even the president, the only thing that he's allowed to carry is a RIM device. I don't know if he's still carrying it, but you just look at the volume coming back down here. This thing is eventually either going to go out of business or probably more likely be sold off and become a Lenovo or a Asus or some other third-party manufacturer of this product. Man, it probably got enough people out of this that were long in the funds. They pushed this thing up. Huge short interest still, so it's going to take a while for the air to come out of RIM. What else do we have out here? Let's see on the positive side what we have pushing the NASDAQ up. Amazon's up a little, of course. Not a big deal out here. This the only company that can sell $16 billion worth of stuff and not make a dime. Green Mountain Coffee Roasters, the usual suspects. Another super high short stock, up 4%. Life Sciences up 3.6%. Cree up 1.7% at $43.73. Yahoo up 1.5%. Another one that just doesn't quite know it's dead yet. On the supply chain for Apple, one of the first decent days for these to show up at the top of the NASDAQ 100. Avago, AVGO. So you might see just a little bit movement or a little movement out of that. Also have another one in the supply chain, MU, up 1.3%. So at least a few stocks out there in that Apple supply chain actually starting to turn around a little. You all have a great and safe day. Catch me tomorrow, same bat channel, same bat time. See you then.